UAE. So any income earned from there would also not be taxable. It's an option which a company can take up in UAE, provided the tax is also being paid in that country. Now, in terms of deductibility of different expenditures which can be eligible, the first criteria is that this should be incurred in the tax period. Now, as you have your financial period from Jan to December, so your first tax period starts from 1st January 2024. So any expenditure being incurred from 1st January 2024 onwards, then only you can claim that as a deductible expenditure. Now, there could be a possibility that you have there are certain liabilities which are not paid. Like generally it would happen at the end of the year. So you have a payment liability in the end of the year of November, December, for which you are going to make a payment in January 2024 or Feb 2024. You cannot claim that expenditure because that pertain to 2023. So only expenditure which are pertaining to your period beginning from the applicability of tax period, that is 1st January 2024 onwards, only those expenditure could be claimed. And the most important is that it should be incurred wholly and exclusively for the business. That means there has to be a commercial business justification and it is being incurred for the business purposes. Because there could be like, where it is owner driven company, they would have the personal expenditure of the travel, which they would be, until now they would be claiming in the business, but that cannot be claimed. So only expenditure which are pertaining to the business that has to be claimed. Not in capital nature. Now, capital nature means that means a company has bought a car or any fixed asset. So, because those assets which is being bought is being depreciated over a useful life of that asset, so that is being claimed as a deductible expenditure as a depreciation in the financials. So that the whole amount, like if you bought a car for around 50,000 dirham, so that amount cannot be claimed in year one. It has to be spread over different years. So that can be claimed, not the capital purchase value would be claimed in year one. It would be claimed as a depreciation. Then it is basically should not be pertaining to your exempt income. Now, if a company is earning, as we looked at certain income which are exempt, like your dividend income is an exempt, so that dividend income will not any expenditure being incurred for earning that dividend. So what could be that expenditure? Like if a company has borrowed fund and investing in other company, and the interest being paid on that on the borrowed fund on those funds, then that interest component being paid is pertaining to a dividend income, so that will not be allowed as a deduction. And any other expenditure with the government, ministry would time to time mention about it. And also you need to be careful that we need to allocate this expenditure if there's something, a common expenditure which is could be partly for the business purposes and partly for your personal expenditure. And this could be most pertaining to your like telephone expenditure, where company gives a telephone uses. So the telephone expenditure could be your, for some of the calls could be made for a personal purpose, some of the calls could be made for business purposes. So they need to be have a contract with the employer. Terms and conditions need to be clarified that okay, 60% would be considered for your business purpose and 40% could be personal. So that cost allocation has to be done, and only pertaining to the business what has been standardized as a practice, as a policy, that portion can be allowed as a deductible expenditure. Then non-deductible expenditures are like donations which are other than the for the your charitable purpose or a qualifying public benefit entities. So government FTA has released a list of qualifying public benefit entities which are non-profit organizations, and if the donations are being made on those non-profit organizations which are listed in that ministry decision, then for that donations, that is basically deductible expenditure. But other than that, those are not part of that list, then the donations being given are not deductible expenditures. And then there is an input value added tax claimed. Now there are certain expenditure where you could have claimed an input VAT, and if you have not claimed that input VAT, which could have been recovered from output, then that is not deductible. Say for example, as I was mentioning regarding your fuel bill or telephone bill, because the amount is very small, sometimes company might not track those input amount. The amount, like if it's a telephone bill of 100 dirham, which is a fixed amount of tariff on which a 5% VAT is being paid. And if that 5% VAT is not recovered from your output, then that 5% will not be a deductible expenditure. So now that has to be tracked. Those small amount of input VAT has to be tracked to claim from your output VAT. Otherwise, for your tax computation, that will not be allowed. Now, the bribes or illicit payment, yes, of course, any kind of bribes being paid is not allowed. Then entertainment expenditure. Now, with respect to the entertainment expenditure, it could be in this expenditure could be pertaining to your employees, where company have annual get-together event, some event being organized for their employees, or it could be pertaining to your external customers or shareholders. Now, with respect to your employees, it is 100% allowed as an expenditure. But when it comes to the external shareholders or customers or business partners, suppliers, for them, the expenditure of entertainment is limited to 5%. 50%, sorry, it is 50% limitation. Now, if some company has incurred uh, uh, an expenditure of 50,000 in a year for your customers or suppliers, then that is limited to 25,000 out of 50,000. And this could be pertaining to your meals, accommodation, transportation, even a club membership fees. Those are expenditures covered under the entertainment. So that will not be allowed. The limitation is 50%. Then the next point is regarding non-deductibility of fines, penalties, or any your penalties or fines pertaining to your VAT returns or any kind of regulatory fines. Those are not allowed. And then any dividend and profit distribution. So dividend and profit distribution is not an expense. It is basically a portion of profit being distributed after tax. So that is not an expenditure. It's not allowed. Then in terms of interest expenditure, so there is a limitation of interest expenditure. It is limited to 30% of EBITDA, earning before interest, tax, depreciation, and amortization, or maximum of 12 million. So the limit is very high in terms of 12 million. So most of your interest expenditure would be allowed, and there would be very limited scenarios where interest would be not allowed. Uh, then your tax on income outside the state of foreign income. So any tax being paid, so within UAE or outside UAE in on your business income, so that tax is not an expenditure. So that will not be allowed as a deductible. And interest, we discuss about it, like now the limit is extended up to 12 million and or 30% of EBITDA. So whichever is higher could be allowed as a deductible expenditure. And this interest covers majorly all, even like lease interest, your lease component, which has a finance lease interest amount component, that is also allowed. So all kind of interest, even your guarantees also are covered under the interest definition. So those could be allowed as a deductible expenditure.